Welcome back to Yahoo Finance Live. In today's Startup Spotlight, we're taking a look at the intense battle that businesses are currently finding themselves in for talent. As a refresher, right now we're sitting on what is a record amount of job openings here in the U.S. When you look at that, in a very intense battle to fill those openings and entice workers, employers are not just upping what their employees are paid, but how they are paid, with flexible new services. And one of those services, DailyPay, lets users tap paychecks in real time so they don't have to wait for payday to roll around. And the company just closed a $175 million Series D funding round. And for more on that, happy to welcome into our Startup Spotlight segment here, DailyPay's founder and CEO, Jason Lee, joins us right now. Jason, congrats on the round. Good to be chatting with you here. You work with some big names, McDonald's, Kroger, and some other ones out there. But what are you seeing in terms of those companies and others trying to use your services to attract new talent?
Sure. Well, Zach, thanks for having me today. Super appreciative that you've had me on here. Maybe just by way of background, DailyPay is a New York-based technology company, and we build software. We work with enterprises, Fortune 500 companies in just about every industry that you can imagine. And very simply, we enable their employees to control the timing of when they get paid. What we've been able to determine is, based on our research, something like 1 out of every 2, called 53% of current job seekers, are actually looking for a job that pays daily. And that should be no surprise, kind of emerging from COVID. And so as we work with the largest enterprises in the country, what we've determined is that offering an on-demand pay benefit is highly differentiated in terms of their ability to attract, retain, and recruit great talent.
I wonder if you can break that down, Jason, on what that means in terms of the extent of the cash strain on Americans who are using your platform right now. I mean, you talk about just how many people are living paycheck to paycheck. I mean, it's not even that, it sounds like. It's really just day to day.
Yeah, I mean, look, there's a lot of research out there, but I think one of the stats that we look a lot at is something like 70% of current working Americans are, in fact, living paycheck to paycheck. And so when you think about that dynamic and just how disruptive that is for a worker who may have already earned wages, they may have already worked a certain period of time, and how disruptive it might be that they are then just waiting day by day, week by week to get that final paycheck. You know, that could mean the difference between paying a $35 overdraft, perhaps being evicted, not being able to make rent. All of a sudden, if you leverage technology to be able to have someone access what we call their pay balance, truly the amount of net wages that they are earning minute to minute, well, that radically changes the employee experience and in turn changes the employer's ability to create the best experience for that employee.
Yeah, let's get into how it works too, though, right? Because obviously you guys got to make some money here in doing this. And you got some people out there who might say, all right, if you got an employee who's living paycheck to paycheck, maybe charging them to tap that paycheck a little bit earlier sounds similar to maybe payday loans and gets into a territory that they might not like. But at the same time, I mean, the fees here are $1.25 to $2.99, if I'm getting that right. Talk to me about how it works in letting employees tap that paycheck.
Sure. Well, look, here's the value that we've built over the last 5 years. Creating this pay balance, believe it or not, is actually really, really difficult. What we had to build was a massive technology platform that incorporates, number one, millions of data points in the HR landscape. Number two, we bring to that data a unique and proprietary funding model. All of the payments that we make are funded off of our balance sheet. Zach, you had raised the funding round we just completed. We also tacked on $325 million of debt. This company raised $500 million in order to provide this service to as many Americans as we can. And then third, we connect into the banking system so that consumers can access this instantly. From a fee perspective, think of it a little bit like an ATM machine. If you go to an ATM machine and take out $100 out of your checking account, well, we all know that money is yours. That's your money. It sits in your checking account. And perhaps you might pay a few dollars to access that money and to receive those funds via an ATM machine. And in the same way, that's how we think about the pay balance. That is your money. We, through our technology platform, have now made that come alive. We've made it accessible. And so you pay a few dollars to be able to access that as well.
Yeah, it's very interesting, and added flexibility in a time where flexibility is very important for a lot of people, especially if they are kind of in those paycheck to paycheck moments and trying to navigate all of these unknowns. But Jason Lee, DailyPay's founder and CEO, appreciate you coming on here to explain it and give us a little bit more detail there. Thanks again.